Okay, hi and welcome. For those of you that don't know me, I'm Vanessa Jansen and I'm joined here today with Hardik.
One of the financial advisors on the team here at Positive Dynamics. Vanessa and I wanted to take some time today just to discuss your options with cryptocurrencies.
Yeah, so thank you for taking some time out of your day. I know cryptocurrency is one of those things that everyone's talking about. People either hate it, they love it, and just gonna let someone else in here. So today's really just helping people have a better understanding of what cryptocurrency is. So you'll just see the presentation there in front, and Hardik, we're just in the, yeah, perfect, excellent. So you'll see that picture there in the front, that's actually our office, our head office, and we're on Marine Parade at Southport in a beautifully new renovated building. If you're coming by, you're in the area, we'd love you to drop in and have coffee, say hello to the team. But a bit about Positive Dynamics. So we started the business back in 2006. And we're really passionate about helping people understand their wealth and options, because if we can help people have a better relationship with their money, we know that there's going to be a strong correlation with their health and their relationships. So today is very specific. It is just about cryptocurrency, and if you'd like to talk any other financial matters, then please organise a separate time to this today. Now, Hardik just flipped over, just a reminder before we get in too far, to just turn your mics off. They should already be switched off, and your video, you're welcome to leave on, but most people feel more comfortable having that turned off, so that's completely up to you. If you do have any questions throughout this presentation, you can just raise your hand. There's a section on the side where you can just raise your hand and just type in those questions. And at the end, we're going to have a session, question and answer session. Please keep the questions for them. We'll be looking forward to answering them. So yeah, just a bit about Positive Dynamics. We did start in 2006, as I said, and what makes us quite different is to other financial planners is that we do have our license held directly with ASIC. That's really important because what that means is we're not affiliated with any particular products. There's no bias to recommend any certain product. We're really here to help you and our clients, with the strategies and the best plan moving forward. So what I'm going to do is I'm going to hand over to Hardik. So I've asked Hardik to join us today because Hardik is our investment analyst. He does sit on our investment committee, and he is definitely the expert in cryptocurrency. So I'm going to hand over to Hardik now.
Thank you, Vanessa. So being part of the financial advice team since 2016, I've worked with Vanessa and Dane and monitored the investment landscape over this sort of period, and cryptocurrencies, it's something that's come up so often in conversations with our clients in the last 12 to 18 months. We thought this would be a good opportunity, a great session, just to sort of pass on some education between all of you guys and answer any questions that you might have on how to sort of invest in cryptocurrencies, right? By qualification, as Vanessa mentioned, I used to be an investment analyst before working with Positive Dynamics, so I am very passionate about investments. And if there's anything else apart from cryptocurrencies that you'd like to speak to us about, please feel free to reach out, and we would be very happy to set a consultation for that. Our advisory team has not just Vanessa and myself, there's other advisors in the team as well, and we all specialize in different bits of advice, and more on that later. We will tell you a bit more about what we do towards the end of the presentation. A general advice warning, any material shown in this presentation, it's just for general information purposes. It is not specific personal financial advice, and yeah, it has to be taken just based on your circumstances. So if you are after personal financial advice, please reach out to us, and yeah, we can definitely discuss those options. So today, just a brief introduction to blockchain and cryptocurrencies. The blockchain, which is what is the underlying technology that backs cryptocurrencies. I just wanted to spend maybe a couple of minutes honing down on that, telling you guys more about how this technology works and why it is so important to understand the underlying technology instead of just understanding, I guess, the currencies, because currencies are just part of the technology, and the technology is the one that is the ledger. It is the information book that all of the currencies are based on. So have a look at this diagram on the right. There's blockchain is just a ledger that holds social facts. It could be prehistoric data like that was initially recorded on clay tablets and wooden tablets to the papyrus and tally sticks, just different ways of storing information, very archaic, very immobile, and it was in a cryptic language. So cryptography, which is important to the blockchain, is just a language in which everything is coded on the blockchain. Fast forward to a couple hundred years back, which is the foundation of accounting. There's double entry bookkeeping, and then Excel spreadsheets that have been around for a few years. The blockchain today, the modern blockchain technology that backs cryptocurrencies is just a way to store information. And that information is stored today on hundreds and thousands of computers. And all of these computers, they transact in different currencies, which is what the underlying cryptocurrency is. So the blockchain technology is something that was founded initially using the blockchain cryptocurrency, using the Bitcoin cryptocurrency in 2009. So Bitcoin was the first cryptocurrency of its sort, which was on that open source blockchain. It's something that has it's grown so much. It is held today throughout by more than 100 million wallets and 100 million different users. And the reason why it has gained this momentum, there were similar ideas before Bitcoin, like DigiCash and the liberal US dollar. However, Bitcoin combines all of the features that some of them individually possessed. So cryptography, which is having secure transactions on the blockchain, having a time-stamped database. So if anyone has an internet connection today, they can look back to the first transaction that happened on the blockchain using the Bitcoin cryptocurrency. They can track every transaction since and every transaction that will happen between now and until all of the cryptocurrencies are mined, which might be a few more hundred years. So this time-stamped database is something that's really important, and previous interpretations of it did not have it on the open source internet. So, and that is part of the reason why you've heard the argument Bitcoin is something that will replace the US dollar. That might be something that helps replace a lot of other currencies. The reason for that is only because it is something that enables these transactions in a very peer-to-peer seamless way. So there's more than, I think there's more than 10,000 cryptocurrencies today, and around 30 new cryptocurrencies are released every single day. So that's another 10,000 that might get issued in the next 365 days. However, less than 10% of them will be around after 5 years. So that's so important for you to know. It's, you could buy any cryptocurrency apart from Bitcoin and Ethereum. If you owned any one of these other ones 5 years ago, you have probably lost money on those because they are most likely not around today, or they haven't performed as well. So that's part of what we wanted to sort of take you through today, is to sort of tell you that, look, cryptocurrencies, I think no one out there knows which one to pick, in the sense that there's different currencies that make different promises. A lot of projects deliver, a lot of them don't. And 90% of the projects fail to deliver on the promises that they sort of make, and you might not find them around 5 years later. And which is why it's more important to understand the underlying blockchain technology. And that is something that we wish to sort of invest in, instead of investing in particular coins like the ones that you see here. So what are your options when it comes to investing? Being financial advisors, our investment guide is long-term. So if you were to look at long-term investing, there's three main options to look at, which is to either purchase cryptocurrencies directly. That would be using a wallet or using a platform. There's quite a few in Australia. If you jumped on any one of them, you could buy one of a few hundred different cryptocurrencies. Now, that's perhaps the simplest way to buy them. But like I showed you in the previous slide, which one of them do you know is the right one? Most of them have, most of the ones in the top 10 from 5 years ago are no longer performing as well. So that's where you can, you need extensive research. A lot of that is something that, it's this research is something that is, you can't find valid research on the internet. And as financial advisors, because cryptocurrency is sort of like an unregulated asset class, we can't tell you which one to buy. And that's where the underlying technology is something that we want to sort of give you access to. And that would be using investment vehicles like exchange traded funds. So an exchange traded fund is something that trades on a particular stock exchange. And instead of giving you access to a range of cryptocurrencies, what we would like to sort of look at is maybe a range of companies that have interests in those underlying assets and have a consistent income stream that they generate from cryptocurrencies. An example of that is cryptocurrency miners. So with exchange traded funds, they are a regulated investment that can be that tracks on a stock exchange. It's something that you can access personally, something that you can access to a superannuation as well, without actually needing to set up a self-managed super fund, which in the past, I believe, a lot of people have used to sort of buy cryptocurrencies directly. There's with the companies that you sort of invest in, there's a high correlation to the price of Bitcoin. And also, it is so easy to report tax because you are investing essentially in a particular company that has assets and income. And they do all of the reporting with the ATO, with the respective tax authorities. So that an ETF is perhaps one of the best ways to get that exposure, or you could say one of the more sophisticated ways to gain that exposure in a non-speculative manner. There's also private trusts and managed funds that you can look at, which is another way to buy cryptocurrencies or gain that underlying exposure. However, it is something that is accessible through a limited number of platforms and mainly accessible only to people with that can be classified as sophisticated investors. So that's where the there's that sort of lack of availability for a lot of these managed funds and trusts. I've already explained what an ETF is. Just I guess expanding on that, there's a whole range of them that you can access through in Australia. There's about 5 that invest not just in cryptocurrencies, but the blockchain technology as well. And yeah, it's something that people that are skeptical about investing in the coin itself, but do believe in the long-term sort of performance of the transformative technology. This is something that would be a much sounder. This is something that would be a much less speculative investment to make. There are also ETFs that are pending regulatory approval to sort of give you that direct exposure as well, without having to buy the coins directly. Something that we expect to be listed on the stock exchange maybe by the end of this year. So we've got an outlook of maybe the next 12 months or so before these can be available on the ASX. So yeah, look, that's my beat on how you can gain access to cryptocurrency-based assets and the blockchain technology. If you have a look on the right-hand side, if you are invested 60% in stocks over the last 10 years and 40% in fixed interest investments and just held a 5% exposure to Bitcoin, then your performance would have been significantly greater. And the average performance would have been almost close to 20%. So I think there is a place for cryptocurrency-based assets in your portfolio. And yeah, we are open to having more discussions like those with you. Obviously, understanding your risk appetite, how best you can sort of set that exposure. It's important to understand that if you have a look at this chart below, it's something that is still a very volatile asset. So something that has performed, has gone up 50% in certain years and then down 60–70% from there. So the return is good, but it does come with an increased volatility. So that's something that we can sort of set after having a discussion with you and understanding your risk appetite and understanding your investment outlook. That's something we would definitely love to offer you as part of your portfolios. It's just part of something that we, I guess, would look at. we would not want to overexpose your superannuation and your personal investments to more than a small exposure to these assets, because 5% gets you that sort of really good outperformance as you've historically seen. So I think that small exposure is all we really need to sort of build a portfolio that's robust. And that's how we would like to treat these cryptocurrency ETFs, as well as just another asset class that offers you a small to medium exposure. And that's uncorrelated in many ways to sort of existing exposure to stocks and other companies that you would own through your portfolio. So I'll hand over to Vanessa just to sort of take you through, obviously, positive dynamics and the other services that we offer as well. And we'll take some questions after that.
Excellent. Thank you, Hardik. So look, just to recap on what Hardik said with regards to the cryptocurrency, we've really designed this presentation because of the demand. You know, we're having more clients come in and let us know that either they've speculated and they've bought some coin, some people have made money, other people have lost money. And you know, it is an unregulated market, buying those coins directly, and something we wouldn't recommend doing. However, due to that increased you know, the increase in people's interest in cryptocurrency, we do see the need for us to have done more research into it, and that's really where we are today, having these exchange traded funds that have come out, and now gives us the opportunity, gives clients the opportunity to invest into that technology. It's something that's regulated, something that will be highly volatile. So we're not building it into our you know, standard portfolios, but it will be something on a case by case. We can look at between a 1% and a 5% allocation. But there'll be, you know, a lot of discussions around your comfort with risk and volatility, time frame. But more of what we do is we, you know, we're about helping people build wealth and wealth management. So we'll not only be looking at strategies around superannuation, some sort of crypto technology investment, but we do help people with property strategy. So, you know, if you're in the property market, you're looking to increase your property exposure or reduce your property exposure, we'll have a look at how that fits in your plan and your retirement strategies. We give advice on investments to, you know, personally to businesses to trusts. So what that might look like is, you know, a business that's got some, you know, $1 million sitting in a bank account. The business is doing really well, and they've just been saving that. But you do have options to get that money invested. And again, that's where if you do really like that crypto space, where we could consider an exchange traded fund to go in there. Yeah, so and that also applies to self-managed super funds. You know, if you've got a bank account, you might have property in there as well, but you've got a bank account, we can get that money invested. We look after insurance, of course, so personal insurance, life insurance and income protection, those sorts of things that are important in, you know, protecting the plan that we're putting together. But the big space around what we're talking today is just helping you understand with regard to the investment accounts and superannuation accounts, you do have now options to invest in that blockchain technology and indirect exposure to different crypto currency. And that is not just for self-managed super funds, as Hardik touched on. That is for everyday, you know, mums and dads with superannuation account. You probably want to have a minimum of $200,000 in your individual account to enable us to really look at a fully diversified portfolio. But that's kind of where we can start out and just look at, you know, what's going to be the best option for you and your super. There are some existing super funds out there where we can put in exchange traded funds, like Hardik mentioned. But the blockchain technology, this crypto exchange traded fund, it's going to be quite limited in the places where we can find it. So it may mean, if you do want access to it, we may need to change who you hold your super with. But it's just falling under the Australian regulation on a retail basis. So that's quite exciting for those that are interested in that space. Some other areas that we do give advice is around aged care and Centrelink. A lot of cash flow analysis. So, you know, how if you are going to be doing some investing, whether it be in property or shares, you know, how does that impact your cash flow? Can you still meet all of your everyday, you know, living requirements? Yeah, so that's a bit about what we do. Now, the process, if you are interested in what we've talked about today and you would like to know more, what we'll start with is initial consultation. So we call that a 20-minute free starter session. We'll show you shortly a booking link that you can click on to access that. And we invite you to, so that's it just down the bottom there, positivedynamics.com.au/financial advice, and that will take you to the booking site and just land on the 20-minute free starter session. And yeah, offer that on to your, you know, friends or family, anyone that's interested, because yeah, it is a space where people are speculating a lot, and people, you know, you hear some great stories, but then there's lots of bad stories that come with that. Really just depends on the timing with such a volatile asset. But yes, we'll start with that first meeting, and from there, depending on your situation, we may then lead into some personal advice for you. There's normally about a 2-week turnaround from our first meeting to us providing formal recommendations to you. And then within a month, we can have things set up and work out whether it's in your benefit to join our ongoing service program, where we continue to help and monitor your financial position. So yeah, so that's a little bit about what we have to offer today. Now, I'm just mindful of time, and you're probably all on a lunch break. We might start with some questions. So Hayley will have been kindly looking through questions as we were going, and I might just ask Hayley to read out any questions that have come through on the comments.
Wonderful. We've had some great questions coming through. So the first one we've got is, I have a self-managed super fund. Can I purchase Bitcoin directly?
Yeah. Would you like me to answer that, Vanessa?
Yeah, sure.
So with self-managed super funds, you can, yes, the answer is yes, you can access cryptocurrencies directly. And yeah, I think at the moment, if you wanted to invest in them directly, you would have to set up a self-managed super fund. However, if you are more interested in the underlying technology and the companies that would be actually making money off investing or mining these cryptocurrencies, then you would come to us, and you don't really need a self-managed super fund for that, because you can invest in an exchange-traded fund that gives you that exposure with a high correlation to similar returns without the speculation side of things. So yeah, that's where you don't really need a self-managed super fund if you wanted to invest in an ETF.
Great. Next question we've got is, you mentioned that we can use our super to purchase the crypto ETF. So this person has said they're currently with Australian Super. Can they access this via that super fund?
It's something we would need to look into, is the range of investments that Australian Super would need to offer. So I guess after doing our due diligence, it is possible that they might offer access to some ETFs. So yeah, after doing our research, look, if they do, that's entirely possible. And that's part of what we do, right? We've got access to tools and resources that help us look at a lot of the underlying investments that you can access through these ETFs. So yeah, I do know that Australian Super do have a range of ETFs. So after doing that diligence, we could look at that. But if they don't, then there are other retail superannuation funds out there. Without having, again, to set up a self-managed super fund, you can just go with one of those funds, and you can access ETFs through them and gain that sort of crypto exposure.
Next question we've got, so you mentioned blockchain technology was the underlying technology allows cryptocurrency to work. What are the other uses of blockchain?
Yeah, that's a fantastic question. The blockchain technology, it's sort of like investing in an artist instead of buying the art directly from them, right? Like, an artist is someone that could make multiple different paintings, multiple different pieces of art. You know, that's blockchain technology, right? Like, it can be used for peer-to-peer payments. There's the payment side of things where you can use it to make transactions very seamless. You can make it to sort of there's a cryptocurrency sort of exchange that allows musicians to register their music directly on the blockchain without having to pay heaps of royalties to middlemen and to sort of agents and stuff like that. So yeah, there's there's a lot of utility in the art world for it. And then there's a financial sort of aspect to it as well, which is the transactions being very seamless without needing a bank in between. Like I could send money to Vanessa if she was sitting, let's say, in a different country without needing a bank. I could just send it from using the blockchain technology very seamlessly.
Another question we've got is, can you please confirm the tax treatment of crypto in super versus a personal investment?
Yeah, cryptocurrencies are taxed just like any other asset is. So yeah, just like you tax shares, and that is part of the reason why we have, I guess, opted to nominate ETFs as an investment vehicle. Because when you nominate an exchange traded fund, you invest in those underlying companies that are managed by a fund manager. So it's like investing, let's say if you wanted to invest in the Commonwealth Bank and BHP and the National Bank, a range of different banks and companies and just this range of companies trading on the Australian Stock Exchange. What you get through an ETF is that entire basket by just buying, let's say, the top 50 companies by market capitalization in Australia. Now, the person that invests for you, so that's something that's part of what we would do, is nominate the manager that would buy those crypto funds for you. They would do the buying and selling. They would do a tax reporting. So at the end of the year, all they send you is a PAYG summary letting you know, well, this is how much income you've gained. This is how much capital gains you've made. Just report these to the ATO. So through the super fund, it happens automatically internally. If you were to own it personally, then you just receive one that you'd have to disclose to your accountant when you finalize the taxes.
Great. We've just had a live question come through from Sandy. So she said, hi, even though I have 100,000 in my funds, I am interested to invest, say, $10,000. What do you think?
Yeah, I think we would. I would love to have a sit down with you, Sandy, and understand your risk appetite, understand your approach. If that is something I guess you would feel comfortable with. Part of what we do is we've got access to this trading software. We've got access to the software that allows us to get a hypothetical simulation of what the performance would have been through any one of these funds over the last 5 years. Look, if you feel comfortable with the risk versus return, if you said, look, I'm okay, I'm investing for a long term, I feel comfortable with that risk, with the volatility, then why not? We would be open to sort of having a discussion with you, but we would obviously want to cap it at a certain percent. And like Vanessa said, it would be somewhere around the 5-7%. So yeah, maybe we can sort of cap it at about $7,000 if you have $100,000 for you.
And I was just going to add just a little bit more there, Hardik, just to confirm our role in the piece of investing. If you are looking at investing directly into the crypto coins, so for example, you decided I want to buy Bitcoin, our role is looking at the due diligence for you. So we won't give the recommendation to say, yep, go and buy Bitcoin or go and buy, this particular coin, but we will help with the research because as Hardik showed, there's so many coins that start up and then disappear, which means people have lost every cent that they've invested. We don't want to see, clients come into that situation. And that's where our role can become a really important one. And it really is just paying a fee for a consultation to make sure you make the right choices and to give you a better understanding of what you're actually doing. Then our role could be then different to that, which is giving the full personalised service and, giving the recommendation around the exchange traded fund and how that fits in with your other assets and what percentage of the fund you hold. So in your case, Sandy, where you're looking really at a 10% of your assuming that's your full wealth, we might decide that that's a little bit high and we might want to trim it down, but that's something we would do on an individual basis to really understand what you're trying to achieve.
Yeah. I believe Sandy has another question that she has just entered in the chat. What are some potential challenges with blockchain as it stands now? That's a fantastic question. I think there's two main challenges, and that's regulation and adoption. So regulation, so cryptocurrencies, a lot of these coins, it's an unregulated sector where when you invest in the underlying companies, even though those companies have fundamentals, like those companies have assets, they've got an income stream generated from cryptocurrencies, because it is so heavily correlated, the performance of some of those funds could be affected in the long run. So I think regulation is something that's important, and that explains the volatility. That explains why from time to time, when like in May last year, China came out and banned cryptocurrency mining. So they banned the blockchain technology, the use of computers for that sort of thing. We saw a massive dip in the price. So until we see the regulation thing change, that's something we'll see the volatility continue. And then adoption is something we've seen go up over time. So as that adoption increases, the volatility will go down as well, and we'll see the price of some of these currencies continue to track along positively.
We've got a question here from Shane as well. So with the ETFs, do you pool the funds of investors, or are they per individual?
What was the question, sorry? With the ETFs, do you pool the funds of investors, or are they per individual? They are per individual. At no point in time, the positive dynamics sort of hold any of your money in a trust or in a pool for you. We would set up an account that is held individually in your name, and we would buy any ETF that is held individually in your name as well.
I might just add a little bit there, just a little bit of education around the different types of, so you've got an Australian share that you can buy directly on the stock exchange. For example, it might be a Commonwealth Bank, or it might be a BHP. Now you're buying that directly, you own that stock, whether your super fund bought it or you bought it personally, or your trust account, you own that purchase. Then you've got exchange traded funds. So how that differs from buying Commonwealth Bank is that you're still buying one stock on the Australian share market, but when you buy that one stock, it's giving you access to a range of other companies. So you're buying a whole lot of companies in one purchase. So you're getting diversification rather than having to go and buy Commonwealth Bank, Westpac, NAB. You're just buying them all in one purchase, but you're staying in one particular sector. For example, in our standard positive dynamics portfolios, we do hold exposure to health. So it's a global health fund, and that's an exchange traded fund where we buy one stock on the Australian share market. So you own that, your super fund owns it, or you own it personally, and you have then access to the leading health companies around the world. Now, if I just relate that now to our discussion here today around crypto, if you do buy the ETF, the exchange traded fund in that crypto space, what you're getting is one stock on the Australian share market that you own or the super fund owns, and you're then buying a range of companies in that purchase that are leading in the blockchain technology, or they might be companies, so actual companies that report to the ATO that invest into cryptocurrency. So you're getting a range of different investments there with that one purchase on the Australian share market. So you invest it and you're not pooled. Now the difference to where the pooling comes in is a managed fund. So a managed fund is, so you're still having access to companies, you still might have Commonwealth Bank and BHP in there, but the difference is, and this is very typical for most Australians that haven't made any change to their super, you've joined your employer and they've set you up in a fund, you'll go into a managed fund, whether that be with Sun Super, Australian Super, Colonial First State, whoever that is, you're going to go into a managed fund. Now, what that means is you are a unit holder within a pooled investment. You don't own any of those stocks. The fund owns those stocks on your behalf. So I guess the difference is in really bad times, a managed fund can get frozen. They have control, they charge more fees, whereas an exchange traded fund or a direct purchase, you have so much more control. You can buy and sell it on the Australian stock exchange on a daily basis. You never had that risk of assets getting frozen or controlled, and it also reduces your costs of holding those assets. So hopefully that answers your question there, Shane.
That was the last question we had in the group chat.
Awesome.
So if anyone else has any other questions you want to have a session individually, please just jump on. I'll get you to put that link back up, Hardik, if you don't mind.
Yeah.
We'd love to have a meeting with you, and if you think this information would be beneficial to anyone you know, we'll be emailing out a copy of this recording. So if you're not already a client of ours, please just contact us with your email address, and we'll make sure that you receive a copy. So thanks very much for joining us. I really hope that you got a lot of value out of today.
Thank you, guys. Thanks for coming.
Yeah.